Well, hi everybody. My name's Rick Hart. I'm the current administrator of the Central Coast Council. Prior to this role, I was the acting CEO for the Central Coast Council right from the time that Dick Person, as the initial administrator, was appointed. I was appointed the initial acting CEO at that time. I'm doing this video because I want to try and inform the community of what's happened over the last 12 months. It is 12 months almost to the day since Dick Person and I arrived at the Central Coast Council. I'm not going to look backwards at what caused everything. The Commissioner for the Public Inquiry is going to no doubt do a very good job of looking at what actually happened and reporting on that. What I want to take you through in this video is exactly what's happened once the financial crisis hit us and Dick Person and I were appointed, and how we've moved things forward. It's a tale that you might find quite exciting in one sense, but hopefully you can see through it the stress and the strains that the organisation has had to go through. This is not about trying to gain sympathy for the organisation, but I want the community to understand exactly what we have been through. The organisation did respond well, and with the help of the unions, we have been able to achieve what we set out to achieve. But it has been a journey that has been caused in a long way by the initial decisions that the state government made. So the journey begins on the 27th of July last year. This is when the council adopted the operational plan for the year 20 to 21. That budget showed a deficit of $13 million, a figure that I want you to keep in mind for later on. We only go forward 2 months to the 6th of October, when the council actually announced that it was facing an immediate and serious liquidity issue. They put in place by the 13th of October a 100-day action plan. Now that 100-day action plan, being blunt, did not cut it. It tinkered around the edges, but it did not in any way look at taking away the costs that were required to balance the budget. And then we fast forward another week later, when the council was unable to make the payroll. It announced to the media and the world that it was unable to pay its staff. There was an extraordinary meeting held, and which was to determine if restricted funds could be used to actually fund the payroll. And the councils were unable to come to a majority solution in that council meeting. The next day, the government announced that it would provide the council with $6.2 million, which was in fact a financial assistance grant that was being advanced and either being paid early to meet the payroll expenses and put some contributions towards overdue payments to suppliers and creditors and so on. And the Minister also issued the council with a show cause letter, which gave them 6 days to respond to a notice of suspension. A week later, the council considered a report on the 100-day action plan, which was an update to show where they were proposing to make savings, which was largely around restricting overtime, not replacement of staff, and so on. But there were no serious attempts to actually reduce the cost structure. On the 27th of October, Natalia Cowley actually commenced as the Chief Financial Officer. This turned out to be a great move because Natalia had experience being a member of one of the large accounting firms in her past, and having also worked for banks, she was able to actually immediately grasp the situation and was able to help me upon my appointment 4 days later. On the 2nd of November, Dick Person and myself actually arrived at the council, and I had a conversation with the Office of Local Government, at which time a decision was made that we had to seek commercial bank loans to support the recovery. In other words, there would be no bailout from the state government. This decision by government set in place the course of actions we then had to follow. In a normal restructuring for an organisation that's gone into receivership, they generally speaking have a couple of options. One, the shareholders tip more money in, or they go to the banks for loans. And the third option is they could be bought out or another investor comes in. In the case of the council, there is nobody who could buy us out. The shareholder, i.e. the state government, had decided they weren't going to tip money into it. So we only had one course of option left to us, which was to go to the banks. At that same time, we had to send out an email to our suppliers and creditors to advise them that we couldn't meet the current payment terms, and that we would be delaying payment for up to 4 weeks. This was because we did not have sufficient working capital at the time to be able to pay wages and creditors. The council was suspended, and we moved into the first thing we had to do was in fact meet with the unions. So Dick Person and I met with the unions, and we talked about the need to restructure and reduce staff numbers. From that point onwards, there were regular meetings with the unions over the next 6 weeks up to Christmas to progress the restructure. So pretty much every week in the month, we were dealing with unions and talking to staff consistently to keep them in the frame. The finance staff started to get a lot of calls from suppliers following our emails out, which talked about we will need to delay the terms. But the big thing that hit us unexpectedly was on the 5th of November. I'll call it Bank X, of which we had a loan of about 107 million with. We got a notice of default because in their wisdom, the government, by removing the council, triggered one of the conditions in the loan document, which is a change of management. Because of that, and because of the adverse publicity, this bank legally was requesting that loan be repaid. At the same time, we were having to consider the need to talk to other banks, because the CFO and I realised that we needed some short-term finance immediately. So we approached Bank Y, so another bank, to finance council's working capital, the cash reserves, and look at some of our maturing debt and capital expenditure. And we managed to negotiate a loan from them with a drawdown date of the 17th of November. So on the 17th of November, we actually got a further 50 million, which enabled us to now pay the creditors and continue to pay staff. Our projection from cash flows is that this would last us until Christmas, and that we would need a further 100 million in order to restructure the organisation and get us through to a situation where we could actually recover the business. I met with the unions on the 12th of November, where we actually started the consultation and we talked about the restructure. So the executive, the directors, were asked to reduce their cost structures by approximately 15%. The corporate area took out over 50% of the numbers that we needed to actually achieve. We also realised from developing the long-term financial plan that we would need to go and talk to IPART. Now, approaching IPART on the 17th of November, we explained the council's position that we were in a liquidity crisis. We did require some extra income, and that we would need a SRV for 10 years. So we applied for a 10-year term for the special rate variation in order to make our plan for the banking industry work. We put in place, by the 22nd of November, the CFO and myself put a package together for the banks, which involved reducing our cost structure by approximately 70 million. We needed an SRV increase. We were looking at an asset sales program of approximately 60 million. And with that, we would require a further million in order to fund all that development and to repay a number of the externally restricted reserves. On the 19th, we actually were successfully able to conclude the negotiations that have been ongoing with Bank X, which was the bank, I remind you, which was wanting to take away the 107 million. So we nailed that one down, and that meant we no longer had to worry about that particular loan. We didn't have to worry about the $50 million loan. So we had 2 loans locked away, providing we were able to deliver the goods. Our problem now was really around the $100 million we needed for the final loan. Before that, we put in place, I had a video where I talked to the staff, and I actually described some of the errors back at the former, when the councils were merged. I described the fact that it was an error by staff in terms of not properly accounting for, in my view, for the restricted versus the unrestricted cash that was available to the entity. But it was pointed out to me by one of the staff that this was actually a change in the accounting policy for 2016, and that had been sort of dictated to us by the auditors, external auditors at the time, and therefore it was, under audit's advice, not an error. That started the discussion that we had with the Auditor General over whether or not the restricted funds were legitimate versus the unrestricted cash that was being shown, and that was an argument that was ultimately resolved by the New South Wales Audit in their favour, despite the Council having a legal opinion from a Tier 1 law firm saying unequivocally that we were right. 2nd December we also had the quarterly report for September come through, and we'd extended the $13 million loss that was projected in the original budget. We extended that out to $115 million loss. That was our forecasted loss for the end of the year. But that did include 45 odd million for restructuring costs, which is where that $100 million needed to fund. That meant the true loss was showing projected at about $70 million, excluding the 45. So we were comparing the 70 million with what only 2 or 3 months earlier they were actually talking about a $13 million loss. We then moved on to more meetings with the unions, and we actually were successful. They worked with us, and at the end of the day we were able to achieve things. The first area that we were removing staff was from the management layers. So we took out over 40% of our 2nd tier and our 3rd tiers of management. We then had to look at the bank loan. So on the 7th of December, the large bank that was the only bank that we could deal with left out of the 4 majors, they sent through their projected long-term financial plan for us, which included the loans. So they had a view about our cost structure and our revenue side, which they wanted us to agree to. So we actually had put together the proposal, and on the 7th of December we were looking reasonably positive about how things would go forward. And later on the 11th of December, the bank advised us that the loan application had progressed to the highest level of authorisation and had been sent to the risk department. Now that's an unusual thing to happen. Councils borrow from banks all the time, and that's just generally done through, as you would go to your normal bank, that's generally done through your bank manager or through the loan department. It doesn't actually go through what's called the risk department, because they assess all the risks of the organisation, and they assess the capability of their entity to be able to recover the money should the entity, the organisation, get itself into difficulty. So we actually had a meeting on the 15th of December where the CFO and myself met via a Teams meeting with about 6 members of the 8-member risk committee for this particular bank. It was a 2-hour odd meeting, and we went through our full long-term financial plan, what we had agreed with the unions, the downsizing structures, what we'd already achieved, what we were in the process of doing, and the asset sales progress and the other things that we had been asked to do in order to get a loan. So on the 15th of December, Natalia Cowley, the CFO, and myself met with the bank, including their risk department. That risk department consists of 8 people, of which there were 6 members on the team's discussion. It was a very robust discussion, and it was entirely focused on what we were doing, and they were assessing our capability to actually deliver what we said we were going to do. Fortunately, we had already got some miles under the belt, so to speak. We had already got a large number of changes made, and we could quite clearly point to the fact we had asset sales underway and other things progressing. We received on the 17th of December draft legal advice from Clayton Utz about the liquidity crisis and the use of restricted funds. This effectively finalised the earlier work that they had looked at, which was determined that there was no fraud or corruption present in the organisation's financial collapse. Later on the same day, banks advised us that the loan could not be progressed because of the risk department's assessment unless they received a statement of support from the state government by 3:45 the following day. And this was because the risk department was closing for Christmas on that Friday. We go to the Friday, which was the 18th, and remember that the bank closed, from our point of view at the risk area, at 4 p.m. that same day. In the morning, I was unable to get hold of the head of OLG or the Minister for Local Government. We left messages, but there was no response. I ended up phoning the Minister for Planning and Public Spaces, the Honourable Rob Stokes, who I happened to have his private mobile number, who actually answered it, and explained the seriousness of the situation to him, that unless I could get this letter signed by a Minister of the Crown, then I would be needing to close the business down, inform creditors and staff that we would not be able to pay wages and creditors come the 1st of January. To his credit, we did receive that letter of support signed, and at 2:38 on the 18th, we were actually able to send that to the bank, which completed our side of the agreement. The council resolved at 3 o'clock to accept the loan to finance the working capital, the cash reserves, and some of the capital expenditure, and we actually got the drawdown of the money. Now, I do want to point out that one of the conditions of this loan, again, was very different to what happens in any other situations. I think I said it was secured against cash flow at most other councils. In this case, the bank was not interested in securing it against the cash flow. They actually asked for hard assets. So to give you some examples of the assets that we gave to the bank as security, one example was the boat ramp and car park at Summerland Point. Another example was the Peninsula Leisure Centre water park, and another example would be the Budgeroi Boardwalk jetty, amongst a whole range of other assets that the bank took security over. So Friday before Christmas, we finally had got ourselves locked in. And I do think that the government really underestimated, when they made the decision that we needed to go and seek commercial loans, the drama that we would go through as an organisation to actually achieve that. It was daunting, it was very, very hard on the staff, and there were a lot of people who were quite badly hurt, and families hurt by what they had to go through, and particularly the reputation and the staff out on the street being accosted and abused by ratepayers. I can understand why, but a lot of this I don't believe was necessary if the agencies of government had actually worked in a more coordinated fashion. So that was the situation leading into Christmas. Following the Christmas break, back in the office on the 12th of January, we commenced the internal consultation as per the Local Government Industrial Award with all our over the major staff reductions that had to take place. So this involved extensive discussions being held with unions and staff, trying to get and being successful and getting a successful outcome, but those were ongoing for the next 3 months or so. The Administrator also issued their 3-monthly report, and the Administrator at the time, Mr Dick Person, also resolved to hold a constitutional referendum for the reduction of councillors in conjunction with the September 2021 local government elections. On the 8th of February, Council resolved to apply to IPART for a 15% one-off permanent special rate increase. That was to satisfy the revenue side for the banks in terms of the loan. On the 21st of February, a senior executive, a second-tier executive of this particular bank, arrived at our front door here at the Central Coast with 2 staff for a meeting with Natalia Cowley and myself. At this point in time, we were a little unconcerned what they were here for, because almost unheard of is such a senior executive fronting up to a customer. What he wanted to meet with us over was to, one, assure himself that we were well down on progress going forward with what we had agreed to do, which we were able to show him. But he also turned to us and said, and I won't get his words exactly right, but he said, "I want to congratulate in front of yourself and the CFO the 2 staff people I've got with me." He said, "Without your client manager, the risk team was against your proposal. 5 were against, 3 in favour. Your client manager, who's in front of you, argued with the risk team that the bank could not let this organisation fail. It had to support them." So he took this extraordinary step of coming to us to actually say that the client manager got this over the line. So if you could think about the stress that the organisation was suffering when it was having these close calls from time to time. But I think it was an amazing thing that that bank did by coming to see us and actually telling us that story. We also at that time received, on the 24th of February, the final Clayton Utz Legal and Financial Forensic Review report, which concluded quite strongly that there was absolutely no fraud or corruption, and also that we were correct with some of our concerns with the policy changes that had been made by the auditors in the past. We actually then had the meeting with the Central Coast Council and the Auditor General over this prior period error. This issue that occurred at merger, which effectively said that at the time, OneView, to quote the Solicitor General's advice, it was not without doubt that the 90 odd million dollars that was sitting in unrestricted cash was legitimate. Under the Local Government Act, it was not legitimate. And our legal advice clearly demonstrated, unequivocally, having seen the Crown's advice, that we were correct. But nonetheless, the Auditor General chose to qualify the accounts later on at their wish. The sale of assets proceeding, the tranche 2 came through on the 8th of March, and the Administrator at the time approved those for sale. As I said, the Clayton Utz had given us the legal advice on the validity of the voluntary policy, and we were able to refute the Auditor General. We had draft advice at that stage. The new CFO, David Farmer, fortunately started then, and David Farmer brought an awful lot of experience with councils that had been in difficulty, had been in administration, and I was delighted to see that he was able to be appointed and to replace me as the acting CEO. And as I said, he brought a wealth of experience, and he has a sound hand and a lot of experience in local government and with dealing with issues, not quite as bad as this, but certainly issues that required government intervention. And the final report was sent by the Administrator to the government and to the community. And then on the 26th of April, the New South Wales Government announced a public inquiry into the Central Coast Council's financial situation, and they set the terms of reference. About that time, Bank Y, which was the bank that gave us $50 million earlier, started to be concerned, and they started requesting financials to confirm our financial stability. And these requests were repeated monthly from them. So effectively at this point in time, we had 3 banks we were having to satisfy. We were also having to report to DPI and the Office of Local Government, and we were also trying to make the cases to IPART for water and sewer and to continue the current rate structure, which was about to commence as soon as I got in. So the load on the finance team at that stage was immense. And bear in mind that it was reduced by close to 30% in terms of the restructuring. On the 17th of May, IPART approved a 15% special rate variation for 3 years only. They apparently did not accept the fact that we were under conditions from the bank to show a 10-year financial plan with that rate increase in it. So they only gave us 3 years, which technically put us in breach of that loan agreement, which is why, after I was appointed, sometime in April, that I actually resolved that we are going to go back and ask for that to be continued on, with the supporting evidence, of course. We then requested meetings with various members of the state government, and the first meeting was postponed with Greg Piper, which to actually talk about the talk about the Auditor General situation, because it seems unreasonable when you have a dispute between a Tier 1 legal law firm and the Auditor General's advice from the Crown, which was a not without doubt, so it was a maybe. There is no third party. The only option we had to avoid that was to go into litigation, and it just did not make sense to waste both ratepayers and or taxpayers' monies. By the end of the year, we had fully restructured and consolidated all the costs into the 2021 year, which meant we were starting off the new year, if you like, with a clean slate. And that budget was the compliant one with banks said. I also just want to point out at that time, a journalist recently expressed dismay that the council made staff redundant and then that they intended to recruit if IPART agreed to increase the fees and charges in the water and sewer area. I'd have to say the journalist clearly did not understand that the council just has to adjust its cost structure to its revenue streams, which is exactly what the council and the previous CEO did not do in 2018-19 when IPART reduced the income by 39. So of course, if the council does get more revenue, as we have requested, then it will employ more staff to deliver the extra service. This is just a simple case of the council matching its expenditure to the revenue. But the alarmist approach really doesn't help in terms of telling exactly the story of what happened. So we completed the end of year and it looked good. Now Mr Farmer and the CFO, Natalie Cowley, have kept a strong handle on things, and our quarter result that we have applied, quarter result which was due and came out at the end of September, which is more the September monthly report, showed us that we were travelling ahead of budget, so we were doing better than budget. We've agreed that we are going to do financial reporting on a monthly basis. We have also commissioned an independent review of the water and sewer operations to tell us to give us an indication how we might manage water and sewer into the future. I've also wanted a meeting with Minister Dominello over IPART's proposed changes to the water, sewer and drainage charges. And I have to say, for an administrator to ask to meet with a minister when they represent 350,000 people, it was surprising that Minister Dominello's office declined, and in fact their response was from the department, not even from the minister himself. So at this point in time, what I want to say is that we have completed over the 12 months one of the major, well, probably the most major restructure that any council has ever had to do in Australian history. It has been successfully completed under commercial conditions, meeting commercial bank requirements. I think one of the comments that I will point out to the Commissioner for the public inquiry, it would have been much more helpful if the various government agencies had talked to each other throughout this process, because they were asking and demanding from us different things at different times which were conflicting with somebody else's request. But notwithstanding that, the staff have done an outstanding job at this time to get us through to this position, and I'm very confident with the new CEO and so on there that they will actually keep us going right out into the future. So we do have to keep maintaining this discipline, and we have asked IPART for extra revenue for water and sewer, and we have asked IPART to keep the current rate structure. Both of those are required to ensure compliance with the commercial agreements we have with the banks to fund us through for the next 10-year period. So in conclusion, the most important thing I want to remind you of is, one, we have applied to IPART for a continuation of the current rate structure. The second thing is we have applied to IPART for an increase in the water and sewer fees and charges. Both of those are required to make sure that our long-term financial plan, which is a key ingredient for the banks, the integrity is maintained. With that locked in, we then can look forward to a very, very secure future going forward. We have some high calibre staff, including the CEO and the CFO. And I believe that with them in charge, you will not see any formal repeat of what we've been through up till now. So finally, could you please put your submission in, give your views on what you think should happen, what you think we should do. We do value that input and we will take notice of it. But it is, as I said, a clear choice for the community, and if we do not receive the funding, then we will need to think about some alternative options. Thank you.